We're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. And I'm Shraddha Babla. First, the headlines. Asian markets open higher even as investors keep a look for China's trade data, while the final reading shows Japan grew at 0.6% in the third quarter. But Bitcoin gains $4,000 in just 90 minutes to touch 20,000 before it came crashing down to 17,000. While SAIL is set to have finalized a 6,000 crore joint venture with ArcelorMittal to set up an automotive plant in the country. And SEBI proposes to allow mutual funds and portfolio managers in the commodity derivatives. US stocks rose on Thursday as technology stocks regained some of the ground that they had lost in the past week. Bloomberg's Abigail Doolittle wraps up all of the market action in US for us.
Stocks rose in Thursday's Wall Street session. The Dow and the S&P 500 finished higher by about 0.3%, while the tech-heavy Nasdaq finished higher by more than 0.5%. So this is the second day in a row where we've had tech trade higher. A little bit of a rebound after what some were calling a rotation out of technology. If so, it proved to be a pretty short-lived one, at least right now. Again, we had technology rebounding on the session, helping the major averages. In fact, some of the big winners in technology include some of those big tech names, Facebook and Alphabet, among others. Facebook was up 2.3%, Alphabet up more than 1%, Apple higher as well. Lots of strength for the chip stocks as well. The SOX, or the Philadelphia Semiconductor Index, also known as the SOX, up just about 1% on the day. That's been the sector of technology hit the hardest at one point from the recent highs, down nearly 10%, so almost a formal correction. But in Thursday's session, we had the likes of Micron, Nvidia, AMD, and many other chip stocks higher. Relative to Nvidia being up more than 1% and AMD being higher, this could come on one of the big stories of the day, Bitcoin. Bitcoin traded as higher by as much as 20% at one point, taking out 16,000 at one point, above 15,000 currently, really rising meteorically, not just in the recent days, taking out 12,000, 13,000, 14,000, and 15,000 in about 2 days, but up from 1,000 earlier this year. It's really pretty incredible. And next week, Bitcoin futures will start trading on the CME. It'll be interesting to see what that does to the trading action. Some say that could perhaps dent it, considering some investors will short Bitcoin once it's available as a future. But overall in the session, Thursday's Wall Street session, risk on. Not only did we have stocks higher, Bitcoin higher, but we also had haven assets flat to lower. So again, Thursday's Wall Street session had a strong risk-on tone. From New York, Abigail Doolittle, Bloomberg News.
All right, let's also take a look at how the Asian markets are doing. The Japanese stocks have risen for the second day on account of a weaker yen. In fact, Japan's Q3 GDP growth has also been revised on account of capital spending. On the other hand, Taiwan's TAIEX is trading with gains of about 0.5%, while the KOSPI has turned negative after opening in the positive territory. But let's also take a look at what the cues are as far as the Indian markets are concerned. And for that, Darshan Mehta and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Darshan, first to you, what's on your list?
Good morning, Shraddha. At this point of time, if you're looking at it, Asia has opened strong. The cues from overseas was also not bad. but the SGX Nifty is not indicating anything. It's trading absolutely flat, but about the 10,200 mark as far as the future was concerned. We had a monster rally yesterday, so hopefully 10,200 should be well kept, or at least in the future side. All the ADRs actually ended with a positive bias. So ICICI was up 2%, Tata Motors 1.6%, Vedanta was up almost 1.4%. So overall, the cues that we're getting from the ADR space is positive. Crude was up almost 1.3% overnight, but trades with a muted take as far as morning trade is concerned. But overall, despite this uptick that is coming, it's headed for the second weekly loss that we've seen for the commodity. Now, as far as base metals are concerned, it was mixed closing for base metals on LME. What did well and what didn't do well? So lead was down 3%, aluminium was down 0.5%, and tin was down 0.3%. The other three base metals did well. So nickel was up 2%, copper was up 0.2%, and zinc was absolutely flat. So it was mixed trading as far as LME was concerned. But China, it's a weak opening because most of the commodities have opened weak. Let's take a look at it. Rubber is down 2%, steel is down 1.5%, and aluminium is also trading down in Chinese session. Gold snapped the 4-day losses, trades with modest gain in the morning session. Now, as far as fund flows are concerned, FI sold in another 1,000 crores in the cash market. This is the NSE provisional data that is there, and the DIIs were actually buyers to the tune of 926 crores. This is the actual figure that is there for the DIIs. FI till now has sold in almost 2,500 crores in the cash market, but DIIs have been aggressive buyers. They bought in almost close to 4,000 crores in the cash market. Now, if you're looking at how the markets were, the Nifty managed to see a bumper rally. All the sectoral indices ended with a positive bias. Mainly, the VIX fell down almost 5.5% since the market was moving up, and you had counters like the Nifty Infra and the Nifty Realty, which moved up significantly in trade. So up 3%, and this was the Nifty 123 points up on the Nifty. What contributed? Bharti Airtel was the biggest contributor, up 11 points. ICICI was up 10 points. Maruti contributed 9 points, trading at lifetime high. Hardly any counters which actually were in the negative. Some of the IT stocks were down in trade, but overall an extremely good session for trade. And Agam, I believe that the PCR may have risen significantly, and put writers may be back after this monster rally yesterday.
Absolutely, exactly how you described it, Darshan, considering we have seen the Nifty move up considerably yesterday. So let's start off with the Nifty futures. Again, we are looking at a little bit of covering because of the fact that we've seen such a pullback up as far as the Nifty is concerned. And coming to the Nifty Bank too, we are looking at strength returning to that particular index. So the index moved up as much as nearly 1% with a little more buying coming along as far as this goes. The VIX, of course, as one might expect, has fallen by as much as 5%, once again below 15, and the put call ratio again has surprisingly come off to around 0.91, so we'll be watching out for that. In terms of changes in open interest, because the fact that we saw the Nifty move up, we saw a lot of profit taking in the 10,200 and the 10,300 calls, and a little more writing stuff which started coming along at around the 10,000 mark, as Darshan was mentioning. In terms of a lot of stocks which are moving into the band, we have RB Infra and HDIL, and also GAIL and Jet Airways among many others. Of course, Jet Airways, where we saw a surge in open interest, we also had its earnings coming in where it's a tad below expectations. And in terms of other stocks too, we're watching out for Idea, which saw fresh longs. So we can expect perhaps an extension of gains here. And Hexaware has finally started seeing some amount of wearing out after the kind of strength we saw over the previous few sessions. So we'll be watching out for that as well as we move into today's day of trade.
Thank you for bringing us all those details, Agam. We will be watching out for those aspects. But let's also take a look at how the rupee and the currency and the bond markets fared yesterday. Saloni Dhanuka is waiting for bringing us those updates. Morning, Saloni. The rupee, of course, ended weaker for the third consecutive session yesterday. How is it likely to open today?
So, Shraddha, it did get weaker yesterday for the third consecutive session, and it is likely to open flat at NDF market is indicating a flat opening for Indian rupee in today's trade. Now, the rupee was tracking losses in the Asian currency market yesterday, and it weakened by 5 paise to end at 64.57 levels against the dollar. Now, a spectacular rebound in local equity market along with falling crude oil prices overseas failed to arrest the slide in rupee. Now, the home currency has lost almost 20 paise against the dollar in the past past 3 trading sessions. On the global front, dollar continues to trade higher for the 5th consecutive session on optimism that US tax bill will be passed before this Christmas, and it now trades near 3-week high of 93.83 levels in the early Asian trade. Traders do remain cautious ahead of the release of non-farm payrolls data, which is scheduled for today evening. Now, elsewhere, the common currency euro continues to remain under pressure for the 6th consecutive session, despite better than expected third quarter GDP data in the eurozone. It trades lower for 6th consecutive session near 1.1750 levels against the dollar. Now, moving to bond market, the 10-year benchmark yield ended 2 basis points higher at 7.05%. And lastly, global funds reduced their rupee debt holding yesterday. They reduced their debt portfolio approximately by 32 crore according to NSDL data.
Okay, thanks for bringing us all those details, Saloni. But Bitcoin may well turn out to be the story of the year. The cryptocurrency is on a no-holds-barred surge, touching the $20,000 mark in intraday trade on the Coinbase platform. Bloomberg's Rami Inocencio is here with a lowdown on the story behind Bitcoin's surge. Over to you.
Talk about Bitcoin, euphoria, exuberance. We're wondering where it's going to end. It still hasn't ended, at least by the end of today. G#BTV3101. We can see that exuberance in the trading of Bitcoin in the white line here. This represents trading on Coinbase, which is the most consumer-facing Bitcoin exchange in the United States. And we can see that it just touched $20,000 per Bitcoin. Now, it's interesting to see that there's a premium against the currency, XBT currency, of about $3,000. This goes to show just how much people are really surging into the currency here. It's surging in so much, by the way. You see this flat line? This flat line is actually when Coinbase actually crashed temporarily. On Twitter, people were asking, what's happening with Coinbase? It's stuck at this number, just under the $16,000 level or so. And then it did start retrading, but it just goes to show some of the problems that can arise with all this money, all these investors trying to get in on this. All right, so that's my first Bloomberg Terminal chart. My next Bloomberg Terminal chart is G#BTV6021. So what we're seeing here is the up and downs of Bitcoin over the past year, and we can see that ever since October through the end of the year, through where we are now, we can see this general upswing in terms of volatility. Just in the most recent trading day, December 7th here in the United States, it pushed past 20%, upwards of 20%. And the highs continue to get higher, but we're seeing those lows not get much lower at all. So we're continuing to see this push higher in terms of the euphoria and the exuberance that we're also talking about here. And before I send it back to you, take a look at this, G#BTV6308. I want to ground ourselves literally in something that's taken out of the ground, the gold that we rely on our currencies with here. And we can see that the gold price has actually just risen by about 7.5%. That's actually the red line. It looks like a flat line, right? That's the gold price here. But the price of Bitcoin has risen by nearly 13% as much as gold has risen over the past year. So it just goes to see where the safe haven is and where the volatility and the possible riches, or not, may lie. Back to you.
All right, thank you for that, Rami. But let's shift our focus from the currency markets to the commodities market. Jayesh Khilani joins us now with all those updates. Morning, Jayesh. We're of course seeing some rebound in the crude oil prices today.
Morning, Shraddha. That's right. We saw more than 1% uptake overnight for crude oil prices. However, in Asian morning hours, they are trading a little bit soft, 0.2% lower for both WTI and Brent. However, we are getting mixed cues as far as the returns are concerned. So oil is headed for a weekly loss. However, this is the second annual gain that oil is on track to post. Now, there is some fundamental news coming in that there is a bit of a relief rally as oil is heading towards this second annual gain. Now, Nigeria's union, we understand from sources that the oil and gas workers may go on an indefinite strike starting December 18th because they feel that there are some unfair labor practices at some of the local oil exploration companies over there, so we'll be keeping a close watch on that one as well. As far as brokerages are concerned, Credit Suisse has upped their target, that is 2018 Brent forecast to $60 per barrel from about 53 per barrel. Now spot prices are in fact trading above that. Moving on to the base metal space, we saw some mixed cues coming in from the LME. However, the index itself has closed lower on all of the days this week, and it is on track to post a second weekly loss. In terms of individual commodities, copper has seen second day of uptick. Nickel gained more than 2%, while lead also fell nearly 3%. Moving on to the precious metal space, we saw some bit of softness come about. In fact, gold has cracked below the 1250 mark. Remember, this is spot gold that I'm referring to. Now, it is also headed for a third weekly loss, so negative news coming in for gold as well.
All right, thank you for bringing us those details, Jayesh. Metal stocks will continue to be in focus. But moving on, the market regulator SEBI has sought stakeholders' opinion on allowing mutual funds and portfolio managers to invest in the commodity derivative market. Now, the Commodity Derivatives Advisory Committee of SEBI has recommended that commodity markets should be opened up to domestic and institutional investors in a phased manner. Sajid Mangad, who filed this report, has all the details. Sajid.
Market participants have been asking for allowing institutions like mutual funds and foreign institutional investors to invest in the commodities derivative market. But one of the biggest resistance was coming through some of the regulators like Reserve Bank of India, which was not so keen on it. Now what SEBI has done based on the recommendations of the Commodity Derivatives Advisory Committee, which has recommended gradual by phase introduction of institutions into the commodity derivatives. SEBI is trying to ensure that to begin with, mutual funds and portfolio managers which are under the purview of the market regulator, they are brought into the entire commodities derivative market. The recommendations seek that mutual funds, whether mutual funds should be allowed to have commodity ETFs or open-ended funds or arbitrage funds for commodities, or existing schemes should be allowed to have exposure to commodity derivatives. Now, this is one way of diversifying the entire risk part of it, but again, it is something which is on the drawing board, and it's just a proposal from the SEBI. From the portfolio managers' point of view, portfolio managers or PMS, which has grown to over 1 lakh crores of asset under management, they are not allowed to invest into commodity derivatives, though as per SEBI's regulation, they are allowed to invest in securities which include commodity derivatives as part of it. So even there are certain concerns which have been raised by the regulator. The regulator is trying to figure out in what capacity portfolio managers can invest in it, whether client-specific risk should be taken for commodity derivatives because it's a risky asset in that sense, or whether a pool accounts should be used, or full portfolio managers should be allowed to pool in the resources and take hedge using commodity derivatives. Now, and the kind of leverage that can be taken on the portfolio as well. So these are some of the things which are under consideration. The regulator has asked for feedback by December 31st, and hopefully in 2018 we'll see some of the institutions like mutual funds and the PMS segment getting into the commodity derivative market.
Thank you, Sajid. Do watch out for MCX on the back of this development as well. But moving to earnings, a bulging fuel has taken its toll on Jet Airways. Now, the country's second largest air carrier reported a 90% drop in profit in the second quarter. Somit Sarkar is here with all the details. Somit, not the best of quarters for Jet Airways.
Yeah, it was not a best of the quarters for Jet Airways because on a standalone basis, they reported a big set of numbers which are also below estimates. Now, though revenue was 3% higher to 5,627 crore rupees, EBITDA, that is earnings before interest, tax, depreciation and amortization and rental cost, was down 31% to 837 crore rupees. EBITDA margins were also contracted by around 700 basis points to 15% in the second quarter of financial year 2018. Net profit was also down by around 90% to 50 crore rupees. So what led to this? It was higher fuel cost, higher other expenses and lower other income, which hurt the margins and profitability of the company. Now, fuel cost as a percentage of revenue for the second quarter of financial financial year 2018 stood at 27% versus 24% in the corresponding quarter last year. Also, fuel cost per available seat kilometer increased 7% compared to last year versus a 2.5% rise in average fuel cost. Now, other income was down around 59%, while other expenses increased by 26% in the second quarter. In the second quarter, it was the international segment which continued to remain under extreme pressure. Revenue from the international segment was down around 4%, while EBITDA from international segment was down around 14%. On the other hand, revenue from domestic segment increased by around 15%, while EBITDA from the domestic segment also increased by 13% compared to last year. Now, last year numbers were restated because of the Ind AS adjustment, and because of this Ind AS adjustment, the company's last year net profit increased by around 441 crore rupees because of a book profit that they had to record in the last year.
All right. Thank you for that, Somit. Jet Airways shares had ended about 2% lower yesterday, so we could possibly see some correction coming in today. But moving on, the Steel Authority of India has finalized a 60 billion rupees joint venture with the world's largest steel maker, ArcelorMittal. Now, that's according to a Bloomberg source. The deal is said to have been in the works for more than 2 years or so. Now, the agreement for the automotive-grade steel plant is likely to be approved next week by Sales Board. And the two steel producers are in talks with the state governments of Andhra Pradesh and Gujarat to acquire land for the project. Now, a joint site selection committee is likely to choose the location within the next quarter. ArcelorMittal and SAIL have not responded to our queries so far. But on to the stock of the day, BPL. Now, that has reported a strong set of numbers for the September quarter with a multifold jump in profit. Let's head across to Nikki Mirchandani, who's standing by with all the details. Nikki, morning. What has worked for BPL this time around?
Extremely good set of numbers coming in from the company. As you just mentioned, it's a multifold jump that we're looking at. Revenue has grown as much as 23% in this quarter on year-on-year basis. If you look at the net profit, that's a 4-quarter high number that we're looking at, and the jump has been almost 16 folds. The EBITDA, for that matter, it's a 2-fold jump there. Margins have almost doubled at 8.2% as compared to 4.5% seen in the corresponding quarter. What has led to good set of numbers will be your higher revenue as well as your cost efficiencies, which is coming in from the company. Now, other expenses and employee expenses, which have come down substantially as a portion of net sales, has what has led to the cost efficiency. Now, if you look at the other expenses, that as a percent of your net sales has come down by nearly 6% as compared to 11% that you've seen in the base quarter. The sharp jump in other income, that's what has led to a sharp uptick on the bottom line front. If you look at the other income figure, that's almost a 26-fold jump that we're looking at a number of around 13 crore for this quarter. This combined with your decline in finance costs and depreciation has also worked well for the company, at least on the bottom line front. To just give you a little background about what company are we talking about, well, it's a consumer electronic company which has a market capitalization of around 300 crore. The promoter shareholding in this company has remained pretty much stable at 63%, and the company is seeking to regain its glory back through online sales. Back in May, it scrapped its partnership with Flipkart and now is in partnership with Amazon.
Thanks, Nikki. We will keep an eye out on BPL today. But there are also some other stocks that are in news today, and let's just go through them. First off, you have Imami, which has acquired about 30% stake in Helios Lifestyle. Now, that marks the company's entry into the e-commerce space. Now, the deal is reportedly for an amount of 100 crores. That's according to an ET report. The company has not disclosed the deal amount to the exchanges. We're also tracking another ET report which says that Policy Bazaar is eyeing a valuation of about 1,500 crores. Now, InfoEdge owns about 10% stake in the company, and they had initially invested about 67 crores in 2008, so do keep an eye out on that name. You also have a couple of QIPs. Union Bank, that's the next PSU bank to come out with a QIP. They've set a floor price at 162.79, so that's about 3% premium to yesterday's closing price. So we could see some minor positive reaction there. NCL Industries, you have a QIP opened for that name as well. The floor price has been set at 249.63. That's also marginally higher than yesterday's closing price of 244 on the exchanges. You have Federal Bank, which has given an in-principle approval for investments to be done by a strategic investor in its wholly owned subsidiary, which is Fed Bank Financial Services. So do watch out for that name. You also have Tube Investments, where the company said it will acquire a controlling stake in two companies, Creative Cycles and Great Cycles. Both are Sri Lanka based. They will acquire about 80% of the total issued and subscribed share capital of each of the two companies, and that will be for an aggregate amount of about $3.4 million. And we're also tracking Kohinoor Foods on the back of bulk deals, where Purinju Elliott's Equity Intelligence India sold 2 lakh shares, that's equivalent to 0.6% at the price of 77 yesterday. The stock had ended about 9 or 10% higher yesterday, so do keep an eye out for that name as well. Moving on, Soumit Sarkar is back with us with all the big brokerage calls of the day. Soumit, what's on your list today? Which are the new stocks that brokerages are covering now?
So the new stocks that brokerages are covering today is first is Morgan Stanley on Future Consumer, and they have initiated coverage on the stock with an overweight rating and a target price of 95, which suggests a potential upside of 61%. Now Morgan Stanley is expecting Future Consumer to be India's 5th largest FMCG company by financial year 2021. They're saying that Future Group's retail ecosystem provides a unique competitive advantage to Future Consumer, as they can launch innovative products with a disruptive go-to-market strategy. Also, they're expecting Future Retail to contribute around 90% of the Future Consumer's FY20 revenue versus 74% in financial year 2017. They're expecting Future Consumer's revenue to jump 3.2 times over FY17 to FY20, and they're expecting the margins to expand by around 470 basis points over the same period. They're saying that scale-driven efficiencies, better fixed cost absorption and product mix improvement would drive the margin expansion going forward. Also, brokerage is also expecting the management to focus on capitalizing growth opportunities within Future Retail store network. Now, they also have a bull case target price of 194, where they're saying the faster ramp up of smaller format stores of Future Retail would drive the profits of Future Consumer going forward. Second we have is HSBC on Escorts. Now they have initiated coverage on this stock with a buy rating and a target price of 835, which suggests a potential upside of 26%. Now Escort is one of the leading tractor makers and is on the road to recover after several tough years. Now, its brand and profit growth are back on track according to HSBC. Now new product introduced by the company will boost the company's market share, margins and profits going forward. Now they're expecting the tractor volumes to grow at a compounded annual growth rate of 10% over FY17 to FY20, and they're expecting the company's total revenue, EBIT and net profit to grow at a CAGR of 13%, 33% and 45% over the same period. They're saying that cost cutting, improved product mix and increased capacity utilization will drive profits going forward. They're also expecting a turnaround in the construction equipment segment in the financial year 2018. Lastly, they're saying that improved demand, favorable monsoon, increasing farm mechanization and improving farming income are the positive when it comes to Escort.
Okay, Soumit, thank you. We will watch out for Future Consumer, a big 61% upside that Morgan Stanley is expecting. On to some political developments now. Gujarat goes into polls tomorrow with 89 constituencies casting their votes on Saturday. Now, the latest opinion polls show that BJP has made up for some lost ground and is leading the way right now, but the Congress is not too far behind either. The more important question is, what do the voters really want? And the Quint finds that out from ground zero.
अच्छे दिन आने के लिए बोले थे, अच्छे दिन अभी तक कुछ दिख नहीं रहा है। सबसे पहला है तो बेरोजगारी का बहुत बड़ा मुद्दा है। हर एक सरकार आती है तो जो बेरोजगारी पर कुछ न कुछ वादे करती है।
गुजरात का युवान हायर एजुकेटेड डिग्री लेकर आज सड़कों पे घूम रहा है।
ये जो जीएसटी लगाया, आज कुछ खरीदते उसमें भी पैसे दो, कुछ देते उसमें भी जीएसटी।
ट्रांसपोर्ट वाले जीएसटी बिल मांगते हैं, लेकिन हम छोटे कामदार है तो हमारे पास पक्का बिल कहाँ से होगा।
जो भी दूसरे स्टेट में इतना डेवलपमेंट है एलजीबीटी कम्युनिटी को लेकर, उतना डेवलपमेंट गुजरात में नहीं है।
Well, I want that my state should have the maximum penetration of all the digital facilities. I want to see that happening.
बड़े-बड़े नेता लोग ऐसे वादे करते हैं नर्मदा में, पर हमारे यहाँ छोटी पानी की पाइपलाइन भी नहीं है।
ये हम ये करेंगे वो करेंगे और करते कुछ नहीं है।
बस अभी इलेक्शन आने दिसंबर तक ये सब सागा चलेगा। बाद में दुनिया ओरिजिनल जो जनता है वो गई भाड़ में।
भाजपा कुछ करे, नहीं तो भाजपा 2019 के चुनाव में गई।
वो हर बार भाजपा को देते थे, इस बार तो कांग्रेस को देना है। अभी वो लोग एक बार उनका भी चांस देख लेते हैं।
There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The non-phone credit growth in India's scheduled banks hit the 10% mark year-on-year, according to the latest fortnightly data available with the Reserve Bank of India. When the fortnight ended 10th November, this number had stood at 9%. And with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned to Bloomberg Quint.
Are we live?